Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, as I've been saying quite a bit, I'm going to continue on with my next 100 trades. This week we finally have a new mystery chart. I have some updates for you. And in those updates, as you know, I talk about stock picking and money management and other concepts as it relates to trades. Getting into trading psychology, continuing my mind to trade segments, I'm going to talk about your mind on trading continued. And I probably have about 3 hours worth of material, so we'll try to squeeze it in best we can in this 20 something minutes that's allotted. But I do want to begin to talk about ways to improve your trading and your life. And that'll make a lot of sense in just a few minutes. Housekeeping, I do take requests. It makes my job a lot easier knowing what I'm going to cover ahead of time. You can send those to davelandry.com/contact. If you would like the slides from this presentation and all the other presentations combined, I forget how many, it's a lot. Go to davelandry.com/StockCharts. I'll also give you some other goodies and some resources for learning trading. If you would like to join me on Thursday nights, davelandry.com/webinar. That is a live webinar. It has been for the last 20-something years. You can go there, and I would love to have you bring your questions and bring your favorite stock picks. All right, let's follow up on mystery charts, and let's take a look at a new mystery chart. In addition to that, let's continue this next 100 trades. Somebody was complaining because I only showed these great winning trades, which do occur on occasion, as you'll see. And I said, well, what if I just showed you my next 100 trades, warts and all? By showing a representative sample, I just mean that I'm just showing mostly my core trades. I might do some intraday trades here and there and some other things that are slightly outside of the methodology. But for this experiment, or for this project, I'm going to mostly show trades from the core methodology and mostly directly from my trading service. So here's today's mystery chart. If this triggers, this will be the next stock in my next 100 trades. So it is risky. I did write that down, put that here. It has a very high historical volatility reading, and you can just look at the chart and see it. This spreadsheet is based on a hypothetical 100K, but I do actually take the trades, and usually in more than one account. You can see it's got a nice cup bottom, bit of a cup and handle. I don't trade directly off of something like a cup and handle, but if I see a bow tie with some sort of big picture technical analysis behind me, or a first thrust, or just a generic pullback, I will take the trade, and that just puts a little wind in your sails if you have that big picture technical analysis behind you. The problem with timing with big picture technical analysis, he tried to say, is that it can take a long time. It's very hard to time off of it, but if you see a big picture pattern, you know that the stock has longer term potential, or whatever other market you're looking at. But shorter term, big thrust from lows here, 100% plus, nice little deep pullback, shake out some nervous longs, and in some cases maybe attract some anxious shorts. Entry is here, stop is down here, initial profit target is up there around 750. Now remember, if we hit that, we take off half our shares and our stop is brought up to break even. And if it moves in our favor by a decent amount, we'll also bump that stop in the interim. In other words, before that initial profit target is hit. So here's EMBC. This was recommended at the trading service back in August, and we're still long. It hasn't done much for us lately, though. Kind of like the old Janet Jackson, what have you done for me lately? But anyway, you can see kind of a TKO move, big thrust from lows. There was some bigger picture stuff working, if memory serves, like cup and handle. This was an IPO, went down, bottomed out. I like IPOs sometimes. I like them when they're fresh and fairly new and they take off. I've got some very simple patterns that I trade there, and I will be trading some of those patterns with the next 100 trade series. But for this one, I do like when they die out and then they bottom out and then begin to take off again. Sometimes you get a truer or a real longer term move, whereas if you get in a little bit earlier, you'll get a nice trade-off a lot of times, but it's usually not sustainable for the long term. Anyway, that'll make sense as soon as we have some IPOs that trigger. In the meantime, if you want to go in and look at some older IPO analysis, you can go to youtube.com/c/Dave Landry. And of course, on the StockCharts channel, you can look at my playlist for Trading Simplified. Anyway, this one did have a bit of a TKO move. Entry was here, stop was down here, initial profit target was up here. Now, in my case, I did take profit a little bit early on this one because it took off on the first day and I figured that it was worth taking profits. Now, when that happens, when you take those partial profits, again, you bring that stop up to break even. In my case, I'm still in the trade. I'm trying to hang on as long as possible to mimic the service the best I can. Now, again, I won't look that gift horse in the mouth, and I will actually recommend my clients sometimes take profits a little bit early. But so far, this stock really hasn't done anything wrong just yet. But obviously, if it continues lower, then we'll have to get out. So here's an update on Verve, which was recommended a while back in July. And we really hadn't seen a whole lot of setups since, just because the market has just been all over the place. But anyway, you can see the parameters down there in the spreadsheet. By the way, if you want to download or actually watch those videos, you can go to davelandry.com/archive. So in this case, IPT was hit, stops up to break even. And then the stock continued to move in our favor, at least initially. So we trailed that stop a little bit higher. And the secret sauce, so to speak, is in letting that trailing stop widen out on the remainder of the shares. So how am I doing? Well, so far not really so great. You can see we were in the black a little bit last week, and this week, unfortunately, based on the newer trades that are being shown here, we're actually in the hole a little bit. But that's okay, because longer term, I know that by chipping away at it, I will catch some winners here and there, and I'll explain that in a few minutes. Here's the open portfolio. So you can see we do have one big winner in the open portfolio, but this triggered a couple years ago. Now, obviously, there were a few losses since this trade triggered, and a few gains too. But this is what the open portfolio looks like. And what you do is, as you have losers in here, and as they stop out, you take them out, and then you keep the winner. So it's, or the winners, hopefully winners. So the idea, obviously, is to cut your losses short and ride your winners. And that's what that looks like in real time. And again, if you want to look at the archives, which have zero hindsight, you can go and look at those at the aforementioned link. Here it is right there. If you want to join me and see some more trades, davelandry.com/webinar. And then my live trading service, which is published every night with live setups, and most of those find their way to this presentation. That's the mystery charts. If you want to see those ahead of time, davelandry.com/trading service. And if you are a member of davelandry.com, a paid member, you'll have access to the Facebook group, which is Dave Landry's Trend Traders. But you do have to have some skin in the game. And we have a great group, by the way. Some people have been with me probably 20 years or longer. A couple of random thoughts this week. The core methodology, trend following, doesn't work all the time, but it does work over time, as I've been preaching. And believe me, sometimes it's tough going several months without making a whole lot of money. And these big winners such as ARLP don't come along every day. One thing I was reading, and I'm not sure who to give credit to, but it sure makes a lot of sense, and I've actually done presentations on this before I heard the term, but as a trend follower, you will spend the majority of your time less wealthy, and I've done complete presentations on that, showing some of our greatest setups, but showing how they panned out, where most of the time they're actually either giving up open profits, and sometimes they're open losses for quite some time before really taking off. But as a trend follower, again, you will spend a lot of your time less wealthy. But here's the catch. The only way to make money is to catch a trend. And so therefore, trend following is the only way to make money. So it just comes with the territory. And that's the acceptance thing that I talk about so many times, is accepting what's required for your methodology. And every methodology would have its own nuances. The trend following with a short swing trade to intermediate term and hopefully longer term trade, as I just showed you with the money management, I believe is the best way to trade. And it's the best thing I found after 20-something years of searching. 3 secrets to trading: patience, patience, patience. You have to wait for setups. You have to wait once you're in setups. And you just have to wait in general most of the time as a trader. On October 7th and 8th, I will be presenting at the StockCharts.com ChartCon for 2022. Very excited about this. Literally just got out of a meeting a few minutes ago, and everybody in the meeting was really pumped up, and I'm pretty excited. Very rarely do you go to a meeting and, and enjoy a meeting, but it was a great meeting. It's going to be interactive, live, 2 days, and that's October 7th and 8th. So please join me, and there's, I think, 13 other people that are going to be there. All right, for Mind the Trade, I'm going to continue with your brain on trades. Now, just a quick recap. Trading psychology is the crux of trading. The rest is just detail. Everything else is really very easy to teach. Not always easy to follow them. That's where the trading psychology comes in. What's happening in your head? We talked a lot about that recently, both from a life standpoint and your recent trading that has nothing to do with the next trade. So you have to ask what's going on up there that has nothing to do with the trades. And I really beat the dead horse over the last couple of weeks. So I really would encourage you to go in and watch those last two videos over the last couple of weeks. We don't really see markets as they are, but rather through our perspective prism, so to speak. In markets, one of the secrets to trading is what is, but once you become an active participant or need money, and let's face it, we always need money, then it becomes a lot harder to see what is versus what you want it to be. As I've been saying last several weeks, there are two U's. There's the U before the trade and the U after the trade, and there's also a U during the trade. So there's two different psychologies and neurologies even, so to speak, at work. Different chemicals and neurotransmitters firing in your brain, different psychology, again, depending on whether you're going into the trade or you're in the middle of the trade or you're coming out of the trade or into the trade. Trading is unnatural. I threw that in last minute, but it really is. I read recently where somebody described traders as functioning psychopaths. And the other thing about trading is I often preach is acceptance. If you accept the risks going into a trade and you're willing to live with it, your life is going to get a lot easier. And if you can't live with it, then do two things. Lower your share size, so you're decreasing your risk, and pick better stops. It's kind of reminds me of Liar Liar. It's like the secretary says, Joe just called, he knocked over another ATM, he wants to know what to do. And Jim Carrey's character was like, stop breaking the law. So it's like, pick some better stocks. And I'm going to hint about some things you could do there in this presentation, and we'll flesh that out in a lot more detail in upcoming presentations. Now, you need to, again, look at a trade and say, is this potential so great that even if I take the trade and lose, you won't get upset? And as I've said in recent presentations, not the last week at Bandcamp, if you could go into a trade and accept the trade, then you will succeed longer term. And if that trade does not work out, if you're willing to shrug your shoulders and say next and move on, and of course learn something in the process, then you have arrived. All right, we're kind of doomed from the start, as I kind of hinted out already. Curtis Faith, as I said last couple of weeks, I think we're going to keep this slide going here. The brain is not designed to process the type of low probability outcomes that traders often encounter, where losing is a big part of the game. People ask me, Dave, I'm thinking about your trading service. What can I expect? I have no idea, okay? It's worked fairly well in the past. I think it's going to work in the future, provided, of course, when there's nothing to do, you sit on your hands. But I can't guarantee anything. And if you think about like the casino business, especially with their high-end games, their edge is only like maybe 0.5%, but 0.5% of trillions of dollars is a heck of a lot of money. And this is kind of what I was hitting at earlier. If you can put on a trade without hesitations, take it off without emotional discomfort, then you have accepted the risks. And again, acceptance, as you've heard me say today and throughout many presentations, is one of those so-called secrets to trading. So, as I've been saying, there's a before, a during, and after the trade. Before the trade, you're full of excitement. During the trade, you might be a little stressed out. And then after the trade, you might have a little hindsight bias. And these are three different sets of emotions, three different sets of chemicals, and also different parts of your brain working during all these things. So bad is if you're extremely excited and you're anticipating the trade, your brain is full of dopamine, and you should all be excited going into the trade, but don't get overexcited and maybe often take the case of the other side. What is the guy that's selling me that stock thinking, as we discussed in prior presentations? During the trade, you have to be careful with an overreaction to reality. We have a stock called Verve in the portfolio. This thing moves like 5 points a day, up and down. And if you sit there and watch it, it'll really stress you out. And as I've discussed in prior weeks, we all tend to have a little bit of a hindsight bias. Hindsight bias is you have some information after the fact that you didn't have before the fact, but somehow your brain sort of tricks you into thinking that you should have saw that ahead of time. Now, I'm not saying don't go back in and really do a post-mortem and look at the stock and say, this thing really was kind of choppy, and take a look at some things that can kind of help you to qualify and quantify that, such as trend qualifiers, as I often talk about, such as Landry light and things like that. Make sure that's all there, of course. And then the other danger is that sometimes we get a little too full of ourselves and think that, I just was unlucky. And the secret to trading is separating luck from skill. And if you figure that out, write me a letter. So getting better, you basically are thinking, okay, I like this setup, but first, I'm not going to do any harm to my accounts. And as I said a second ago, what is the other guy thinking? Always think about the trade, and then also think in terms of doing nothing. One of the paradoxes and dilemmas, however you want to look at it, with trading is you can't lose any money if you don't trade, but you'll never make any money if you don't trade. Now, when we get into a trade, we're expecting a greater fool to come along, but you always have to ask yourself, am I the greater fool? As I've been saying in past weeks, the transformer test, basically that just means what does what's going on in your head, what's going on with your recent trading, what's going on in your recent life have to do with the actual trade. Acceptance. There's that word again. You're going to see that quite often from me. During a trade, you need discipline, obviously, to do what you have to do. You have to accept what's happening. Hey, I bought a stock that bounces up and down 5 points a day. I cannot expect it to do any differently once I get into it. So I'm going to have the discipline to follow my plan. And after all is said and done, you need to do a brutally honest post-mortem. And the true enlightenment comes when two things happen. Number one, which will happen first in your trading career, you will begin to tell yourself, what the hell was I thinking? And you'll go back and look at those stocks that you traded, and you'll be like, this thing looks like an electrocardiogram. There was no Landry light there. The pullback was way too deep or way too shallow or whatever the case may be. And that's a given. You're going to get there, I promise you. And that's just the details. Again, the trading psychology, that's the hard part. But the true enlightenment is really going to come when you lose on a trade and you go back and you look at that chart and you say, you know what? If I saw this trade tomorrow, I would take it again. And you realize that, hey, I just got a little bit closer to the next big winner because I did exactly what I should have done. It takes a while to get there, but you will get there over time. Unfortunately, even if you've been at this a long, long time, you'll still look back at trades and think, what the hell was I thinking? Also, real quick, you got to remember that's not always a lesson to be learned. And of course, as I often preach, to the point of beating a dead horse, the market could be a really bad teacher. And again, figure out how to separate luck from skill. Now, if you always say you were unlucky when you lose on a trade, then you will never become successful. You need to look back and say, you know what, maybe that setup wasn't so great. And the other great part of enlightenment, which will come over time, is when you have a winning trade and then you go back and look at it and think, I probably shouldn't have taken that trade, but I'd like to thank the market gods. So when you reach a point where you identify that you got lucky on a mediocre trade and then just realize that the only time you feel like you're unlucky is if you put in a trade that you should have taken and it just didn't work out, as opposed to every single losing trade. Then you have arrived. So let's talk a little bit about getting better. There's 3 things you need to do: document, document, and document. Now, the first thing I'd recommend you do is document your life. I'm going to change your trading in your life right now for absolutely free. I've done this presentation a few weeks back, and it's something I'm very passionate about. It's only 2 things you need to do. You need to wake up a little early, and people say, I don't have enough time. Well, get up a little early, okay? And the same people that don't have enough time probably watch Game of Thrones. And I watched it. I avoided watching it for a long time, but eventually watched it. That's 100 hours or so. My wife watches Grey's Anatomy, and I looked that up on the internet. That's like 14 days to watch every single episode of that. She's not a big fan of me pointing that out. But anyway, so you have more time than you think. And step 2 is write 3 handwritten pages. Now, this is just flow of thoughts. I grabbed a page that didn't have too much personal stuff on it and just talk about what's in my head. A lot of times I'll talk about how I slept or didn't sleep, if I'm tired, if maybe it's on the weekend and I had a long weekend, and things like that. So if trading is not going well, maybe I can realize that maybe I wasn't operating under peak performance. Now, here's one of those things that I kind of alluded to earlier. Instead of letting it go to my head that I had a really good week, I began to pick things apart a little bit. It's like, why was it a good week? Was there volatility there? And I have some misspellings in here, as you can see, Philo-Spy. What external forces that had nothing to do with markets that influence my trade? So that's kind of a random thought here, and that's kind of where some of this content came from. And you'll notice the last couple of presentations I talked about a lot about the life in your prior trading or recent trading that affects your trade. So that's where that came from. And I start talking about here, you can see I was talking a little bit about the psychology of winning and gambling versus being prudent. Now, sometimes when you're doing really well, you might press a little, but you got to be really, really careful with that. The S&G trades can also work, but as I've written here, if you're not careful, you can lose some and possibly all of your recent capital. So you just want to recognize the dangers and the pitfalls, and I think that's important. And I began talking here about the psychology of money. And one thing that I've been guilty of before is if I make a bunch of money, let's say an intraday trade, I'm a little lottery rich, and sometimes I'm quick to give away that money too soon. Now, in addition to your morning pages, which will really help with your reflection, I would encourage you to document your trading. And you can see right here, I came into this day, and I tried to pick a few days where it looks like I was stressed out. In some of these days I made money, and some of these days I didn't. But you can see right here, I was skittish lately after some not so hot trading. And I began thinking as I'm watching this market, what would cause the most pain? So right here where it said how many fake outs of fake outs. So the market faked out higher, faked out lower. At what point do I want to jump in on the market? Now, this is not my core methodology. I'm here all day. So I will take some intraday trades, but I did have a little bit of a dilemma here. As you can see, it's like I'm going to need to sit around until I can't stand it, as opposed to chasing my tail. Now here I'm talking about that I had a trading not to lose kind of mentality. Once I discovered this SARK ETF, I was kind of drawn to it like a moth to the flame. Now, I was looking at the S&P on this day thinking, okay, maybe it's an opening gap reversal. And then one thing I realized is, and this is the dog with the bone, and he sees the reflection in the water of a dog with an even bigger bone, and he drops his bone and jumps in the water. Now, I can't make out my handwriting on that, something I did get better with over time with this digital tablet that I'm using, but I actually missed an IPO because I was too busy looking at day trades. So I made a little note here, you'll do that once. And also I'm able to put tags in all this so I can look at my mistakes. Now here's speaking of mistakes, you can see here I forgot to place a limit order on an initial profit target, and then not that much longer later, luckily the market came back and I was able to get out. And once again, I talk about my emotional tracking down here. Kaizen is something that I'm a big fan of. The Kaizen Way is a book I'd recommend you read, a little short read. But Kaizen is just doing little things to improve your trading. If you want to make a big change in your life, you want to make a big change in your trading, sometimes it's something as simple as a very small change can make a huge difference. In that case, I wasn't using a stop ordered entry to enter the stocks, and if I would have done so, in some cases I would have missed some losing trading. Now, we're just kind of scratching the surface here. We'll pick it up next week on the importance of documentation, and I want to talk a little bit too next week about the post-mortem and get a little deeper into that, and lots of epiphanies and little things you can do to improve your trading. So we'll pick up this next week. I want to thank everybody for watching. If you need any follow-up information, again, there's my contact information. So again, thanks for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.